and good morning, guys. Welcome to another fabulous episode of Exit Strategies Radio Show. Hey, I'm your host. Yes, that is me, Colin J. Millett, broken owner of Exit Realty Low Country Group in beautiful North Charleston, South Carolina. Hey, if this is your first time listening to the show, guys, y'all are in for a treat. Yeah, real talk. Y'all are in for a treat because our mission is very simple. That is to empower our community through financial literacy and real estate education, guys. We are legacy building. That is what we do. And guys, in concert with that, in line with that, y'all know what I'm talking about. We today have none other than one of our local faves, all right? TAMARA York with York Superior Mortgage Group. TAMARA, how are you doing today?
I'm doing amazing. I am doing amazing. Cannot complain. How are you?
I am phenomenal. So look, guys, we got some stuff to talk about because we started talking behind the scenes in the studio, and look here, she got some stuff to tell y'all today. So y'all gotta get right. But Taryn, before I get started, if you don't mind, tell our folks a little bit about you and about York Superior Mortgage Group.
Yeah. So again, my name is TAMARA York. I am broker owner with York Superior Mortgage Group. I've been in the industry for the past 4 years, started York Superior in July of 2022, so this year. I love what I do. It's very rewarding to see the smiling faces on my clients' face when they get the keys to their home, when they've been told no repeatedly, from other institutions, and they come to me and I make it happen. I need stuff to work with to make it happen, but I'm big on education and financial literacy. So when they leave me, they come to me as a client, they leave as family, and I'm always giving them tips and tricks and everything else on financial literacy. Wants to stay in the home. The goal is to own it and stay in it. So I'm giving them everything needed to be prepared for that. But again, I'm a mother of two. I have 2 little ones, grade school, and I'm a wife as well. So I'm from North Charleston originally. So that's a little bit about me.
Look here, homegrown. So ain't nothing wrong with that. So look, let's start with, time when we have our lending partners come through, one of the things that we talk about, obviously, is the climate, the market, current. But obviously the markets always fluctuate. It's always fluctuation and change in the market. No matter what you do, no matter what, it's not going to stay the same. And people oftentimes get stuck. They get thinking, okay, well, this is what it is. It's going to be this way. And then when it changes, they get all out of sorts about it. But let's talk current climate. I know a few days ago, last week, matter of fact, I'm, at Realtor Conference, and my phone starts blowing up with messages, text messages, and all this stuff from lenders that are telling me, hey, rates are falling. And everybody was all excited. So can you tell people what that blurb was as it relates to, that fluctuation in interest rates?
Yeah. So, of course, everything is regulated by the feds, the federal government. And, with the rates increase, we just had a rate hike about 4 weeks ago. And then I believe there was a segment maybe about a week or so ago was basically saying we're not headed into a recession. So the rates started coming down. So for a while, the norm was, contingent upon credit profile and other factors, around the high 5s, 6s, even in 7s, depending on the type of loan program that you're going to get into. But yeah, rates are coming down. Where they're going to stay at or where they're going to range at, that's the question. Because I believe there's supposed to be another rate hike next month from what I'm being told. So where that's going to go, we just got to get creative and just be prepared for how rates are going to affect homeowners and the buying power of homeowners, really.
Mm-hmm. Okay. So, and that's something that most consumers, and for our listeners, guys, we want to make this thing simple. Okay. There is a lot of complexity, a lot of things that factor into home, the rate that, people lend money. You think about credit card interest rates fluctuate, they change, typically based on what prime is. So that is the government rate plus whatever percentage point. But mortgage rates don't do the same. Mortgage rates will fluctuate differently. And some other, car loans, they also fluctuate differently. So for our consumers, we want to make sure that you, kind of, have a basic understanding, but don't get bogged down in the minutia. Because at the end of the day, most of you, as you look at home ownership, and Tamara, please, correct me if you disagree, but, when you look at home ownership, it is a fundamental need. Oftentimes you're buying a house because you need a roof over your head. You know what I mean? Correct. So, we oftentimes, have this long conversation and get it, mucked up and complicated when really and truly people just need a house, need a roof over their head. And the shift from paying for somebody else's roof to quote unquote now putting your own roof on, that's the differentiator. So, we were talking in the studio. Yeah, because look here, you got some vocal points to make as it relates to what people should be prepared for. You talked about financial literacy as kind of a premise of a fundamental for you. So let's touch on that. What do you mean by that when you talk about one of the first things you want to do is help people be more financial literate, before you help put them into a home?
So with me, I'm a mortgage broker. So basically, just to lay that out, I can do everything a bank can do. A bank cannot do everything I can do. So I work in a wholesale aspect of mortgages to where I work with multiple lenders across the board. So I have anywhere between 10 to 15 different lenders. And the goal is to get all my clients pre-approved. So during the pre-approval process, I'm seeing everything. I'm seeing bank statements. I'm seeing pay stubs. I'm seeing everything needed to get you pre-approved. So I'm seeing the spending patterns of clients. I'm seeing, things that's, not a necessity being spent on, but then, I'm getting bank statements and there's not enough money for a simple earnest money deposit, which is, what we have to get a ratified contract with. And earnest money in this area is anywhere between $500 maybe $2,000, depending on the nature of the market and the housing market that we're in.
If you're getting the 500, you're getting a miracle. But go ahead.
Correct. Correct. So if we're having a hard time saving up money for just the earnest money deposit, that's not even touching the surface of down payment, and total cash to close, which is, your attorney fees, your interest, prepaid, stuff of that nature. So where I come into play is just the simple, what is a need and what is a want? Mm-hmm. Like people have to realize, especially if, you don't have deep pockets or money just is not falling off all around you. We have to be, smart at how we make our moves when we buy stuff. So, I've seen bank statements where clients have come to me and they're spending $2,000 and $3,000 a month eating out. I'm seeing that. I'm seeing going on trips. I'm seeing stuff where it's like, and they're living way above their means. So if we cut that, and then sometimes it may take a sacrifice to buy a home. That means we might have to eliminate getting our nails done. We might eliminate getting our hair done, whatever it is, haircuts, going out on these lavish trips. We might have to cut that out until after you buy the house. And this is what I tell clients all the time. After you buy the house, you are now a homeowner. So you don't have a landlord to call when your roof leaks. You don't have a landlord to call when there's a plumbing issue. I personally just got my roof repaired and it was $17,000. Mm-hmm. So that's nothing to where it's like, oh, well, who just has, money of $17,000, $20,000, whatever it is, just sitting around. So you have to be conscious of how you spend. And so that's where I come in and it's like, let's do better in general. Like, yes, my goal is to get you into homeownership, but I also want you to be financially literate when it comes to that, because if you actually understand financial literacy and homeownership, there's equity built into these homes that you're purchasing. So now we can pull out, whether it be a HELOC, whether it could be a cash out refinance, and start businesses. We can do whatever is necessary to make sure our kids is taken care of. But you just have to be smart with it. And so that's where I come into play. And step one is looking at these bank statements and just saying it's a hard pill to swallow, but we need to cut out these spending habits.
So I'm going to take you back to something. So I'm going to take you back to a previous market, but I'm going to bring you right back because it's the same thing. Previous market, back when, we had a tremendous amount of foreclosure, short sale activity. I saw a lot of, modifications and things of that nature underway. And there's some people that, you could get modifications and it could work and they restructured fine. And there's some people that couldn't. And I distinctly remember a number of times when you see people that, because people are able to restructure. They think, well, I can restructure. So they take these trips, Disney World or, Universal. I mean, they go on these massive vacations. And when the bank statements come in, because the lender would ask for the bank statements come in and you didn't make your mortgage payment, but they saw that you was at Disneyland all week or wherever all week. And, you ain't stay there. Mickey ain't got no room in his house. So, Mickey and Minnie, they ain't got, they got a dog, they got, friends and stuff. They ain't got room for you. So, now here we are, like you said, people are taking, these trips and they're taking, look here, hold on. I'm gonna say this real quick. I'm gonna get, but you're gonna take it and run. So I'm gonna say this, I'm gonna stop. You're gonna take it and run. They taking it so they can take some snaps, some selfies and post to the book. But then, like you said, now you're getting the bank statement. Here it is, a little bit later, and there's no money for the transaction that they're trying to make. So what's that about?
It's a mindset. It really is a mindset. It's changing that mindset because me personally, I don't care if I get likes on, I went to, Paris. Or honestly, I'm probably not going to post my moves, to be honest with you. But it's just the nature of the time, that we're living in right now. And instead of, having people know your moves, it's just like, save up your money, because those people that you're trying to impress probably don't even care, to be honest. And it's like, it really is a shift in mindset. And that's my goal is, if I can even just touch one person to say, hey, this is the benefit of homeownership. Yes, rates are high, but it's temporary. But look at the benefit, because your house is going to go up in value, because if you look at it, you're paying towards a bounce. The bounce is going to come down, but the value should go up just as long as everything goes accordingly in the market. So there's your benefit. And not only that, you can pull out money from a house, whether it be your primary or an investment, and buy another investment. Because there's so many programs, especially working with me as a broker. I have this amazing program for investors. We're not looking at debt to income ratio. We're not looking at income. It's called debt service coverage ratio. And it allows you with no DTI. So it doesn't matter if you can, just as long as your tenant is paying your mortgage, it's a win. Like, so now, and then on top of these programs, a lot of my lenders, because I work with multiple lenders, the Fannie and Freddie, which is a government loan for, investment properties, they cap you at 10 properties financed. With these debt service credit coverage ratio programs, there's no limit. I have people that have 37 houses financed, 40 houses financed, and that's their retirement.
And, so it's funny you should even say that. So, I just left, I say I left, but, a group that I'm a member of, top agents. We just recently, had a meeting. And in our meeting, we had a business coach or coach that came in, and, we're end of the year, so everybody's starting to plan for next year. So, they came just to kind of a big session, with everybody, not, in depth, but kind of, hey, this is, let's start mapping out what your next year to look like. Let's start working on that planning. And one of the things that she said was, every year you're in the business, you should buy an investment property. And, we think about this. So, and this is not just for real estate professionals. I mean, listeners, this is for all y'all. You know what I'm saying? If you work, in the current market, and tell me, you can, you can say this and hit the numbers like spot on. But in our market to buy, quote unquote, the average price house, you got to have a household income of somewhere around $90,000, if I remember correctly, in order with a little bit of debt. If you got more debt than that, you need higher income. And we're talking household income, guys. So let me be clear in that, as far as the buyers and stuff go. But you think about that when you start putting it in context, and that's not all houses, that's the average. If you're buying a house that's lower in price point, you won't need as much money, but you need some money. You know what I'm saying? You need more than $20,000, working, wherever. You need a little bit more income than that in order for you to be able to qualify. So when you're at that level, when you're growing the equity in your home, like as you said, well, you know what? Let me tap the equity and buy an investment property, so I can increase my cash flow. That investment property at that point in time will pay for itself, throw some money off to me. As real estate appreciates, I gain appreciation. and I have equity there. And you keep doing this as a cycle. Maybe you don't pull it off every year. Maybe you pull off a new investment property every 5 or 10 years. But if you work for 20, 30 years and you can buy a property every 5 years, then you've accumulated a few properties before you get to retirement that now give you retirement income on top of whatever else you may be able to accumulate. And some of us, I mean, shoot, I'm in that mix. Hey, we got to build our own retirement because, hey, we're not employed. So there ain't nobody paying attention for us.
Correct.
So, what does that look like? So there's so many options there. There's so many things that we miss there. But it all goes back and trickles back to what you started with, which is a mindset for that.
And then to also piggyback off what you were saying in regards to investment. Now, if you break it down even more, you have short-term rentals and you have long-term rentals. And everybody is doing the Airbnbs. We personally live on the coast. So now you're buying that investment property. And just as long as the area that you're buying in will allow for a short-term rental, which again, I have lenders that will do short-term rental properties. And now let's say your mortgage payment is $3,000 a month, but you're getting that amount and more in 1 week off of an Airbnb and short-term rental. So now for a full month, you do the math. Just as long as you meet your bottom line, you have your expenses laid out and you have your mortgages paid. If you got to have a management company, cleaning crew or whatever, lawn maintenance, you have that all written down, itemized, and then you make sure your bottom line is met on top of what you want to net. So the possibilities are endless. You just have to have the mindset to say, you know what, it might take a sacrifice up front right now for me to say, I'm not going to eat out. I might have to walk around with my hair kind of messed up, or I might have to just do it myself, come up with something to where it's a sacrifice. And then once you meet your goal, then you can go back and allot yourself an allowance, right? Just because the money is there, don't mean you can have to spend it all. Like allot yourself an allowance. And because that's what I do. Because we don't know where this market is going to go. It slowed down from January of this year to current. But, if you budget correctly, you're not going to feel that effect.
That's true. And I mean, so it's funny, but, previous, interview, I was having this conversation about preparation, and we're all guilty of not being prepared at times. And for those that, not prepared, you just got to, try, trudge, work, push your way through, quote unquote. But nonetheless, we're definitely all, guilty of that. However, some of us, sometimes, in the thought process, it's always, well, I got time. But, we have to do it now. We have to start thinking and putting things in place now. Home ownership is a now. What I'm saying? Investment property is a now. And what I mean by the now is when you can, as soon as you can, you do it. But you're preparing yourself constantly to do it. So if I'm preparing to be a homeowner, meaning I'm budgeting, matter of fact, let me take the B word out because Lord, they hate the B word. If I'm managing my expenses properly, if I'm setting aside money for down payment, if I'm cutting expenses, doing all those things, working on paying my bills on time, my credit and stuff is increasing. Then when I get to where everything meets, that's a now moment. Homeowner, buy. Subsequent, I continue to work on that now, doing the same thing again to buy the investment property. And when all that stuff mixes and meets together, it is a now. We're going to do that now.
All right.
So that's the thing that we have to exercise. We air this show on an urban gospel station. Shout out to Terry Bass, WJNI 106.3. We got to give my man a shout. But, if you think about it, as we air, we're on a faith-based station, right? And the word teaches us now faith. Ain't that something right there? Now.
Is dead.
And faith without works is dead. So we got to do that thing. I made a post recently about faith because faith is everything. Faith is a noun. It is an adjective. It's also a verb, depending upon how you structure it in a sentence, where you apply it. But faith is all things. So in all things. So if we apply faith to what it is that we're doing and we make it now faith, as it says in Hebrews 11, now faith, is a substance.
Correct.
If we make it, if we do that, then we change the narrative in our lives. And that's the thing that we got to do. But I'm going to say this, Tamara, and I'm going to get back, make sure we get your contact information. But on the other side of that, if you go a little bit further, in that quote unquote, that now faith, we also talk about putting on the armor. That's the thing, we clothe ourselves with the armor, right? But we talk about clothing ourselves with the armor, but faith needs to be our undergarment.
Correct.
So we got to put our faith on first, because without faith, the armor don't work.
Correct.
So that's a word, right? I'm gonna stop right there. I'm gonna leave that. I'm gonna leave that right there. But so you work with people on understanding their finances and putting things in place, and I know that's a hard conversation. It's a hard conversation.
It is.
So what do you advise people to do outside of the things that you mentioned? Cutting out expenses, nails, all that kind of stuff, in order to make sure they're preparing for not only home ownership, but also to be investors and participants in our economy?
I mean, unless money is not an object, it's just, I prepare for worst case scenario, because if the numbers get better, then we're good. Now you can utilize that money. And if you need furniture, whatever, we went over. But it's just really, I tell everybody, be prepared to have at least 7 to 10% of the purchase price that you want saved. I'm not doing 3 to 5. If a down payment is 3.5%, you don't have enough money out the gate. So it's more so just 7 to 10% of the purchase price saved. So if you're trying to qualify for $300,000, we need 10%. I mean, and I tell everybody, different loan programs have different guidelines. So we can use checking, we can use savings, we can use a 401k, we can even get a gift. Whatever it is, and I just come up with them, and I look at their individual profile. So I'm looking at the full credit profile, and I'm analyzing, I'm dissecting it and say, okay, this is your issue. Because what people don't realize, if you have a spending problem now, if you cannot afford a light bill, if you cannot, and I've seen it where I've seen overdraft. I see people living off of overdrafts, which if I submit those bank statements to a lender, I don't care if you currently have the assets, if you currently have the income, they're going to look at that history and say, okay, why would I lend you $250,000 if you can't even be mindful or keep up with a $50 bill, a water bill? So they look at us, and that can disqualify you. So I'm giving them the ins and outs of, okay, this is what we have to be mindful of. If you don't have the money, don't spend it. So that's really, it's individual. I have to look at it case by case, but that's the goal, is to educate them at the end of the day. So when they leave, it's well, you know what? If I don't have it, I'm not going to spend it. Same thing for credit cards. If you don't have that money sitting in your checking account, because the way I use my credit cards, I utilize my credit cards because that money's already sitting in my checking or savings account. And that's how you build your credit. That's a whole nother topic. But that's the fastest way to build credit, is through credit cards. But whenever you spend and don't have it, and now you're paying the minimum payment, this interest is adding up, it's gonna crush you. So now I tell people all the time, this is one of my key pointers. We all know groceries, gas, that is a necessity. Charge it on your credit card, because you're going to use your debit card anyway. Charge it on your credit card instead. When the bill comes, pay it down. Money's already sitting there. So there's small little, tidbits that I give out to get them credit savvy, to get them, with financial literacy and stuff of that nature.
Good deal. So Tamara, how can people get in contact with you?
So my phone number is 843-804-7976. I also have a website. It is www.ysmgbrokers.com. And I'm also on, the main social media platforms, Facebook, Instagram, whatever it is. But my main points of contact is phone and or not my website.
Awesome. So look, guys, as I always ask y'all, I want y'all to break Tamara's website. All right. I want y'all to log on there and click for contact information. I want y'all to shut it down. I want to make it so that somebody got to call her and say, wait a minute, I can't get on, because she is committed. That's one of the things that I'm going to share this briefly as we wrap up today's show. First and foremost, Tamara, thank you for taking time out of your busy schedule to be here with us.
Thank you for having me.
The part I'm going to add in, though, is not all are willing. Not all are willing. Not all are willing to have this conversation with you, bring you the truth about the finances. Oftentimes we're trying to force square pegs in the round holes, or round pegs in the square holes, whatever it may be, trying to get something to work when there's other challenges that need to be addressed first. And we need to have that understanding. So, Tamara, thank you so much for being that champion and advocate for financial literacy in our community and working to serve those people that you serve to the highest level of satisfaction. I really appreciate that. So for our listeners, guys, you know how we do, you know what we do, and you know how we feel, but we're going to say it anyhow. Guys, thank y'all so much for tuning in. Thank y'all for listening from wherever you are in this entire world, from Monk's Corner. Yeah, Monkey's Corner. Yes. all the way down to Chucktown. For those around the world who are tuning in, thank you so much for being loyal listeners. You know how we feel, but I'm going to say it right now. I love you. I love you. I love you. And we're going to see you guys out there in those streets.